Hello, from wherever you are viewing this video from, welcome to this channel and welcome to today's topic. So what we are doing today came about because of one of the comments that I saw in the last video I made on how you can get financial statements of any company on the Nigeria Stock Exchange NGS website. So the lady commented that I should go ahead and talk about how to analyze financial statements. So first off, you have to know the financial statement of which company you would like to analyze and how you can get it. If you don't have any presently, you can just come to Google and check. Let's say you are interested in okay, let's say Seplat Q1, that's Q1 quarter 1 2025 financial statement. Now remember to put PDF in front. You can also get it from the NGS website, but this is also Google. You can get it from Google as well. So here it is. You have it here, Q1 results. Yeah, you can download it from here. Now you have it. Now, as you must have known by now, financial statement is a record of the financial activities of the business or organization. There are some components that are very vital in every financial statement. You will always find them there. That's the statement of financial position, which some people already know as balance sheet. We have the statement of profit or loss and other comprehensive income. People sometimes call it the statement of financial performance. Some even call it income statement. Then you also have the statement of cash flow. Then there is the statement of changes in equity, and then the notes. Those are the basic 5 components of every financial statement. So now, how do they look like, so that when you see one you will know that okay, this is what it is. So you can see here, interim condensed consolidated statement of profit or loss and other comprehensive income. Then if you check here, for the 3 months ended 31 March 2025. So what this means is that the statement of profit or loss and other comprehensive income, or statement of financial performance of this particular company that you have in front of you, is for the month ended Q1. It is the financial performance over a period from the first month to the third month. This is it. And then always take note of this is in naira. As you can see, this 2025 is in naira, and it will be compared to the past year. This is also in naira. Then this is in dollars, $1,000, and this also is in $1,000. Then this is the financial position that I said most people refer to it as a balance sheet. This is it here. It comprises of the assets. Assets is further divided to non-current assets, the current assets. Now, I think at this point I need to talk about this. So, after mentioning the major component of a financial statement, there are other 5 elements that are in the financial statement. Elements this time around, not components now. Elements. We have the assets, we have the equity, we have the liability, we have the revenue, and we have the expenses. So what do these terms refers to? So the asset is basically the economic resource the present economic resource that the organization has due to past events. So it can be fixed or current. Okay, now the fixed means that it is not convertible to cash within a 12-month period. That's when you have the land, the machinery, other assets. You see them here: oil and gas property, PPE, property, plants and equipment, right of use. These ones under this non-current, they can't be turned, they can't be converted to cash within 12 months. Then we have the current assets. These are the consumables like inventory, the stock, the prepayment, the cash and cash equivalent that that can be turned into cash in the 12 months, within the 12 months. Then we talk about the equity. So what equity is that it is the residual interest that you get when you deduct liability from these assets. When you deduct there is this almighty accounting formula that says asset is equal to liability plus equity. So the moment you remove your liability from your assets, you get your equity. Okay, so now what is liability? Liability are the present obligation of an organization incurred during a past event, from a past event, that at some point there will be a transfer of economic resource from the organization in payment of it, yes, to fulfill it. That's basically liability. And it also have the current liability and the non-current liability. Same, the distinct is also the 12 months. Which one needs to be repaid within 12 months, which one can stay more than 12 months. So I hope I'm not too fast. So that's it. You know the major components and you know the major elements. Now you will notice this is the notes. What this means is that if you need further explanation on how they arrive at this, what makes up these numbers, you can easily visit all these numbers. It's different from the page number. So you can just visit 16. For this, you can go to 14.1, you can go to 17. So that's basically what they have meant for. So moving forward, I've said balance sheet is basically the financial position at that point, at this point, which is at the point this was released, that is the 31st March 2025. This is the financial position of Seplat. Total non-current assets is this in naira, is this in dollars. Total current assets is this in naira, is this in dollar. That's it. But for P&L statements, it is for that period, the period of this time around, January, February, March. For the period, this is the report, the statement of the profit or loss. Then moving forward, we have the cash flow statement. So the cash flow statement talks about the cash flow statement talks about the operating activities, the cash flow from the operating activities that the country did during the period, the investing activities and the financing activities. It's divided into three components like that. You see, from the operating, if you need more from this cash generated from operations, you can just go to this note 15. Everything is listed out there. Then the cash flow from investing activities, this is it, and the cash flow from financing activities. Then the one more thing is the statement of changes in equity, how the equity for that period, how they've changed. So this is where you have them here. Now let's now go fully into the analysis of this statements. Let's use the statement of profit or loss as an example. So you need to open your Excel. need to open your Excel. Okay, I've prepared this down here just not to take much of our time. You need to open your Excel. This is how your Excel will look when you just open it. You then need to move out all these vital informations, revenue, cost. You can't copy it direct like this. You can't do like, oh, okay, you can't do like this because it will not come out well. Imagine you try copying it like this and bringing it to your Excel. See, it won't make sense. So you have to, it's part of the work, it's part of the job. You have to be copying it one after the other. Copy this, paste it. That's how you have to be doing it one after the other. So if you're able to, then to arrive at what I've done here, you can remove the grid line, come to view, grid line, you can remove it here. You can remove it here. Then once you are done, you want this like to be underlined, to be constrained in that particular, you can come here to wrap the text, then adjust it here, make it go up. This, here you go. Then if you want that there should be a line underneath, come to your borders here. You have bottom border, top, left, right, so you can pick the bottom, see the line there. So roughly if you follow this example, you are going to arrive at something like this. Yes, something like this. If I zoom it in, okay, this is it, the balance sheet. Now if you notice, I deliberately left it the exact way I copied it. So here, instead of brackets, you can see that it is giving minus. If you just copy from here, this, it will just appear here as minus. So for those that are not yet familiar with Excel, can just get a drop down of everything, copy, just find your, have it like this, drag your mouse on it like this, just click on this comma. Automatically it will take up the accounting format, same as this. Automatically it will take up the accounting format. Yeah, take up the accounting format. Then let's say you want this to be at the center. Here you go, now at the center. Then to get this, just shade it, come to this. I'm trying to break everything down for everybody to be able to follow through. And if there is any question, any comment, just drop it in the comment section. I'm always looking at it, reading your feedback, so I'll be able to, subsequent video I'm going to talk about it. However, talking about this statement, there are some key drivers and ratios that have to do with each of the statements. For example, for the balance sheet, you can talk about the current ratio, you can talk about the debt to equity ratio, or the likes. That's going to form the basis of the next video I'm going to do. We are going to discuss about all the ratios, the debt service coverage, the liquidity ratio, all of that. So just stay tuned to this channel. Now, I deliberately left this gross profit blank. I didn't copy it. Operating profit blank. I didn't copy it. This finance cost net, I didn't copy it. Profit before taxation, I didn't copy it. Profit or loss for the year, I didn't copy it. Here is why. Because if you keep copying everything, you are not really going to get how Excel works, most especially for those just new to Excel. So it's always advisable to make your Excel as dynamic as possible to confirm that okay, what you are copying is actually correct, especially when there are addition or subtraction. So now to get this gross profit, okay, I think I need to tell you about this. The structure of a P&L statement is basically revenue, your revenue. Let's say your revenue is X. Then you have your cost of goods sold. Cost of goods sold to be cost of goods sold. Then you are going to have your operating profit. operating profit. So you can do it like this. Yeah, this is basically the structure of the P&L. You have this here. Then after you've gotten this operating profit, now have your operating profit, you now subtract less expenses. Now less your expenses from it, your expenses. Once you've less your expenses, you have your this gross profit. Gross profit. So after you less it, you now have your operating profit. Some people call this EBIT as well. Some refer to it as EBIT. Earnings before interest, tax. This EBIT, you have this. Then you now have your other, if there are other income, other ways by which the company made their income, you now have it here, other income. For example, see this finance income, this other income, finance income, other income that the company, other ways the company made their income. Let's say you have these two. Now you now have your, this is where you now have your PBT, profit before tax. This is where you now have it, either positive or negative. Now have your profit before tax. Then you introduce your tax expense. Then let's say your tax expense too, introduce it, you paid it, tax expense. Then you have this. Then finally you now have your PAT, profit after tax. Have a profit after tax. So this now talks about the profits the company or the organization made during that period. The profit the organization made during that period. So now back here, we already talked about revenue, gross profit being revenue minus gross profit, being revenue minus cost of goods sold. Revenue minus cost of goods sold. This is already minus. This is minus. So since it is Excel, you don't need to be doing this minus this anymore. No. So what you just need to do, you can do equals. For any formula you are writing in Excel, you have to introduce your equals to sign. Sum, once you click this, sum this, draw it down, this 535433. Now if you compare with what we have here, you see it 535433. So in a way, it helps you to cross check what you have copied to be sure that yes, you copied the right thing. Now you notice that there are extra 2 zeros here. You can just remove them by coming here. Yes. And instead of using the equals to sum to make your work easier, smarter, you can just use your hot and equals. Just do it for you. Then you can drag it down here. Yeah. So here you are. To remove this. So yeah. So to confirm what you just did, 63813. Here you are, 63 813. So even just by looking at this, you notice that there is a significant increase in the gross profits of this particular company in 2025 compared to the previous year of 2024. Yes, that's analysis. Now you started your analysis. Now look at it again. The revenue, significant increase in the revenue in 2025 compared to 2024. Significant increase in cost of sales. So that means this alone shows that something must have happened. Probably they purchase new investments that requires that makes their revenue to increase this significantly from 260 to 1.2. So what we just did is called vertical analysis, vertical financial analysis. What we just did is horizontal analysis. You compare what you have here on the same line together, 1.2 to 2, horizontal. When you do it like this is when you do vertical and horizontal. So we are going to still do a change here. Then gross profit margin is equally important. This is where vertical analysis come into play. You have your gross profit divided by your revenue. Now it should be in percentage. Draw it down. Yeah, so what this means is that we are already doing the analysis. So what this means vertically is that the ratio of the profit to the revenue is 44%, while here the ratio of the gross profit to the revenue is 24%. So again, we sum this up. Now you have to be careful not to pick this, your percentage. So you just pick this, comma, then you can come here and draw it down. 361262. You can compare again. 361262. You can drag it, so you won't have to be doing it one after the other. So you have it. Again, operating profit. You can actually come here to copy and paste. However, it's still your operating profit divided by your revenue. So again, in percentage 29, and this again in percentage 46. So checking it, 122,377, yes. Then this is to operating profit margin 29 in the 2025 and 46 in year 2024. Then again, you notice I didn't fill this place. Because when there is net, it means the difference between the finance cost and the finance cost, the finance income and the finance cost. So it's better you just do this again, remove the percentage. Yeah, you have it. Then this drop down, draw down. Here you have it. So you're already getting it, the basic part. Then here we come, the profits before taxation. We are still following this is just the basic. This is the basic structure of the P&L. When you come to the profit before taxation, now you have it equals sum. You need this. Now you don't need this anymore, you need this. Yeah, you have 314,646. Yeah, so again, compare with what you have here, 314,646 and 103,513. Then to get your profit or loss, you remove your tax that is here. Then you have this again. Then you have this that you bring here. Yeah, now this is the first stage. Again, this is vertical financial analysis, while this is horizontal. Horizontal, you compare it to the prior year. You compare it. That's why the note is also important. You will see where they explain everything that has happened during that period and why the figures are the way they are. It's part of the financial reporting standard. Now let's talk the changes. The change between 2025. So this formula, you can use two formulas. You can use the current year. You can use the current year minus the past year into brackets divided by past year. Okay, you can use this, and at the same time you can use current year divided by past year minus 1. Because if you are a student of mathematics, you will know if you put this past year inside it to be current year over past year minus 1. So what you have here will be, this is our current year minus which one should we use? Current year divided by past year minus 1. Then you can bring it down. Make sure it's in percentage. So I hope this is clear. So now this gives you a fast way of talking about the increase. Now if next time you have your hand on any of these reporting analysis outputs, that's when you hear for the compared to prior year, the revenue increased by 357% compared to prior year. Cost of sales increased by a significant 238, and see this huge gross profit. So that shows that something happened. Most likely their investment activity surged during the period. The investment activity surged during the period. Probably they purchase new items, they purchase new investments. So here you go. This is the analysis that you asked for. I'm trying not to exceed time. So is it. If you have any other comments, you can drop it. It will most likely drive where the next video is going to go. Once again, thank you for being here. Thank you for listening. This is we analyze the surplus energy. Now we may look at how to now turn this into graphics, where you have the table and bring out all the slide and not compare to prior years. Let's say compared to 2023, 2022, 4 years in a row, 5 years in a row. Okay, no problem. Here you have it. Thank you. Do enjoy the rest of your day wherever you are.